Hello everyone, good evening. Hello everyone, good evening. Welcome to the Vanik Smart Class. Today we are going to discuss the memory-based questions of banking awareness by IBPS PO. This is Tapasa, the Faculty of Banking Awareness Vanik. I'd like to request everybody that to join as much as possible and give all your answers and write all your doubts in your chat box. One by one we'll discuss all these questions. I hope everybody is participating over here. So let's start the session without wasting our time. Here is the question. Number one, if the cost of the raw material increases, then the cost of final product is also increases. If the situation leads to the inflation, then it will be referred to as that. It's a very common types of question. It's a very much common types of question. Always comes in exam. You can give this answer. Tell me the answer. What will be the answer? It's a part of inflation. Okay. What is inflation actually? Inflation is a market condition or economic condition when the prices of the goods and services increases and the value of money or the purchasing power of the money decreases. ओके इकोनॉमिक ऐसा एक सिचुएशन है ऐसा एक सिनेरियो है जब गुड्स और सर्विसेज का प्राइस इंक्रीजेस हो जाता है और उसके अगेंस्ट में मॉनेटरी वैल्यू और परचेसिंग पावर ऑफ द मनी डिक्रीज हो जाता है दैट सिचुएशन इज कॉल्ड इन्फ्लेशन ओके जिसको हम हिंदी में मुद्रास्फीति भी बोलते हैं जिसको उड़िया में दरदाम वृद्धि बोलती okay so it is basically divided into two types one is called demand pull inflation one is called cost push inflation okay it is basically divided into two types one is demand pull inflation the second one is cost push inflation okay what is demand pull inflation demand pull inflation occurs when the demand of a particular goods increases and its supply is limited then the price of the goods or services will be increased that is called demand pull inflation okay same as if the cost of raw material if the cost of raw material increases that's why the price of the final goods also increases that situation is called cost push inflation okay but here is the question that if the cost of the raw material increases okay तो क्या होगा आंसर if the cost of the raw material increases then the cost of final goods also increases it's the situation of cost push inflation okay cost push inflation so our answer is going to be option A that is cost push inflation got it In India, we have two measures or two index to measure inflation. One is WPI, Wholesale Price Index. One is CPI, Consumer Price Index. Okay. Reserve Bank of India takes Consumer Price Index for calculation it inflation and make policies and plans to reduce the money supply in the economy and control the inflation and deflation scenarios. Got it? Let's go to the next question. What percentage of adjusted net bank credit should be in priority sector lending for small finance bank? It's a very interesting question and logical also. It's a based of current affairs, banking avastra ଗୋଟେ ବହୁତ ବଡ଼ part କରିପାରିବା is priority sector lending. Priority sector means basically it is categorized into agriculture and allied sector. Agriculture and allied sector. Okay. Basically 8 sectors or 7, 8 sectors are comes under this sector. Okay, example agriculture sector, MSME, housing, export credit, renewable energy, okay, weaker section of the society, education, etc. Okay, as the main intention of starting a small finance bank is to promote the financial inclusion in a country. That's why, okay, financial inclusion of our country. That's why Reserve Bank of India make it mandatory to provide minimum 75% of its total loan to this particular sector, that is priority sector lending. इसका मतलब ये है कि एक स्मॉल फाइनेंस बैंक इसकी टोटल एडजस्टेड लोन का और नेट लोन का 75% इस पर्टिकुलर प्रायोरिटी सेक्टर को देना पड़ेगा कंपल्सरीली, जिसके अंदर एग्रीकल्चर, एमएसएमई, हाउसिंग, एक्सपोर्ट क्रेडिट, रिन्यूएबल एनर्जी, वीकर सेक्शन और एजुकेशन आता है. Okay, and all the other banks, other commercial banks have to pay 40% of their loans to this particular sector, but 75% of the loan will be given by the small finance bank to this sector. Next question: the maturity period of cash management bill can be. बोले सर क्या हुआ? What is cash management bill? It's all about the concept of banking awareness. Everybody knows that what is T bill or treasury bill. Okay, treasury bill is something which is issued by the Reserve Bank of India on behalf of Government of India to raise some fund or raise some capital by issuing of this instrument. It is T bill. Okay, इस इंस्ट्रूमेंट के अगेंस्ट हम मार्केट में कुछ पैसा इन्वेस्ट करेंगे. दिस मनी विल बी ट्रांसफर टू द गवर्नमेंट ऑफ इंडिया. ओके, so the minimum amount of certificate or treasury bill can be issued is rupees 25,000. Okay, and it is issued for 91 days, 182 days and 364 days of maturity. Okay, it is one type of money market instrument through which the Reserve Bank of India raised some capital on behalf of the government of India. Got it? Same as if government want to raise the capital, okay, it is same as the treasury bill but less than 91 days. Okay, same as the treasury bill but less than 91 days, then it will be called cash management bill. That will be called cash management bill. That means the government of India is doing some security to raise the capital for a short period of time, that is less than 91 days. It's called cash management bill. It is an interesting thing over here that no interest or no coupon is paid in T bill or treasury bill. Okay, you just think if we will get nothing, like no interest will pay, then why should we invest in treasury bill or cash management? The answer is that it is issued at discount. Okay, it is issued at discount and redeemed at face value, or else, okay, if it costs 25,000, then it will be issued to the public for 24,000. And when the maturity of this bill or the date of the maturity comes, then 25,000 whole amount of the bill will be paid. Got it? That is called discounting, or zero coupon instrument or zero coupon bond. Got it? Here is a question. Question number 4. What is non-convertible debenture? Non-convertible debenture. What is non-convertible debenture? बोलिए sir. Option 8. Debt instrument issued which acquires the equity status at the issued option. Debt instruments acquire the equity status in the investor's option. Debt instrument which acquire the equity status with the permission regarding the company. Debt instrument which acquire the equity status on maturity, or debt instrument which retain their debt character and cannot acquire the status or equity status. बोलिए सर, आंसर क्या होगा? पहले तो बोलिए सर कि डिवेंचर क्या है? What is debenture? In commercial term, we can consider debenture is an of debt. Okay, is an acknowledgement of debt. It means when a company or an organization, okay, private company or organization wants to raise fund or capital or debt, okay, it can issue some instrument as a certificate that on behalf of this or on this guarantee, one can invest some amount of money or provide some debt to this particular company. Company ର ପଇସା ଦରକାର ଅଛି, company bank ରୁ debt ନେଇପାରିବ as well as ଲୋକମାନଙ୍କଠୁ ଆଉ public ଠୁ ବି debt ନେଇପାରିବ. ଯଦି public ଠୁ କିଛି debt ନେଉଛି, then on this behalf it will be issued some particular bond or debentures or debt instrument. Okay, that is called debenture. So the debenture which has the characteristics to convert into equity share, that is called convertible debenture. But the debenture which do not have the characteristics to convert it into equity share, that is called a non-convertible debenture. So the answer will be debt instrument which retain their debt character and cannot acquire the equity character. The answer would be E. The answer would be E. चलो फिर नेक्स्ट क्वेश्चन को. Which of the following measures are required to control inflation? Increase in taxes, price control, reduction of unnecessary expenditures, all of the above or none of the above. You know what is inflation is? Inflation is the market condition when the prices of the goods and services increases and the value of the money decreases. Okay, and one condition is there which influence inflation so much, that is the supply of money. There's a supply of money. Okay, when there is more supply in the economy, then it is obvious that the demand of the goods and services will increases, and that creates inflation in the market. That's why government of India takes the initiative to control inflation, that is called fiscal policy. And the Reserve Bank of India takes the initiative to control the inflation are called monetary policy. It's called monetary policy. Okay, so the government can increase the taxes. Okay, it can control the prices, it can reduce the unnecessary expenditures. The answer would be D. All the initiatives have been taken to control the inflation in the market, because we already know that there is so much of money flow in the market and you need to control it by reducing the different by increasing the different rates and reducing the expenditures. Got it? So option D would be the answer. चलिए फिर next question को. What does the term open market operation refers to? Is it selling of equities into the market, selling of commodities into the open market, buying and selling of government securities in the open market, or buying or selling of products in the wholesale market? So the answer will be C. Buying and selling of government securities in open market. Okay, it is a part of the quantitative measures of monetary policy. Okay, under this government of India can buy or sell the government securities to control the money supply in the economy. Take an example with the people have so much of money in our account. Okay, if we have money we definitely demand something. Okay, those who have money they definitely want to invest it or they want to expend it. Whenever they want to invest or expend they always demands. Okay, but in case of demand, if there will be limited supply or less supply for that, then definitely the price of these goods and services will increase. That is the reason that government of India can sell the government securities. Okay, for example, we have 5 lakh rupees excess amount of money and we are enjoying by expending. Or if you are expending the same amount of money, then definitely we demand something more. In this particular stage, the government of India will sell some securities. Take an example, it will sell a bond or a security which cost 5 lakh rupees and it will be issued for 5 years. Okay, 5 साल के लिए इशू हो रहा है, उसका डिनोमिनेशन क्या है 5 लाख रुपया. इसका मतलब फॉर एग्जांपल अगर हम इसे इन्वेस्ट करना जाए तो क्या करेंगे, तो एक बॉन्ड खरीद लेंगे जिसका वैल्यू है 5 लाख रुपीस एंड फॉर 5 years. That means for the 5 year or next 5 year we're not able to, okay, in the next 5 year we are not able to sell this or not able to use it for expenditure. Okay, on this priority or on this basis the government of India absorbs so much amount of money from the economy or from the system. That is called open market operation. Okay, that is called open market operation. I hope you got to understand that. चलिए फिर नेक्स्ट क्वेश्चन को. On the basis of an assessment of the current and evolving macroeconomic scenario, Monetary Policy Committee decided to keep the policy rate unchanged. MPC stands for what? MPC stands for Monetary Policy Committee. Okay? MPC stands for Monetary Policy Committee. The Reserve Bank of India have so many works to do or so many functions to do. It is a banker's bank, it is a bankers to the government, it is a sole authority to issue notes, it's maintain the foreign exchange reserve, okay? It control the money supply in the economy, okay? They have multiple functions by a single institution and there is a work or a function to maintain is control the money supply in the economy by formulating a monetary policy. That's why an individual committee has been formed under this to scrutinize all these rules and regulations and access uh, the inflation, measures the inflation. On that basis it will decide to increase the rate or decrease the rate to control the money supply in the economy. That's why monetary policy committee have been formulated, where six members in this committee. Okay, three members are from Reserve Bank of India and three members are from the government of India. Okay, ultimately the governor of RBI is the chairman. The governor of the RBI is the chairman of Monetary Policy Committee. Got it? So this create has been created basically on the recommendation of Urjit Patel, ex RBI Governor Urjit Patel's recommendation. It was constituted in 2016. Okay, where six members are there. They help the Reserve Bank of India for formulating the rules, regulations, and policies regarding the monetary review, and it is the the monetary policy reviews in every 2 months. That's why this policy is called bi-monthly policy. Okay, bi-monthly policy. Your next question is also associated with this particular thing, that is RBI adopted bi-monthly policy on the recommendation of whom? We just discussed the same. It is Urjit Patel Committee. It is Urjit Patel Committee. In India, the Reserve Bank of India also established as per the recommendation of Hilton and Young Commission, same as the Payment Bank was established on the recommendation of Nachiketa More Committee, same as Small Finance Bank was established on the recommendations of Usha Thorat Committee, same as NABARD was established on the basis of Sivaraman Committee. Okay, RRB was established on the recommendation of Narasimhan Committee. Okay, Narasimhan Committee. These are some important committees regarding your bank examinations. Avilash, good evening. चलो फिर next question के लिए, what is NDTL? What is NDTL? NDTL stands for Net Demand and Time Liability. Net demand and time liabilities. Okay, so in case of banks, the deposits are the liabilities of the bank and the loans are the assets of the bank. Okay, so in NDTL we are considering the demand and time deposits as asset. Sorry, we should go through the options. The option one says that it means demand and time deposits are assets of the customer but liabilities for the bank. Is it right or wrong? It's obviously right. But whatever the amount we deposited in our account, this is also, these are called the assets for the bank, and it is ultimately the liabilities for the bank, because the bank has to return the amount of money with interest. But we, the people who invest or deposit our money in a bank account, will get periodic interest. That's why loans are always assets for the bank but liabilities for the customers. But in opposite, deposits are the assets of the bank and liabilities for the customers. Sorry, liabilities for the bank and asset for the customers. Next question number 10. Treasury bill is available for the minimum amount of 25,000 as we just discussed before. Question number 11. Which of the following is a money market security? What is money market security? The market or the finance market is divided into two types. One is money market, one is capital market. Okay, money market is a market where the short term securities are buy and sold to raise the capital from the market. Short term means it will be issued maximum of a period of 1 year. Okay, but the long term market is called capital market where the instrument is issued for 1 year or more period of time. So as we know that T-bill is issued for 91 days, 182 days and 364 days. Call money is the interbank monetary transaction for overnight basis or 1 day basis, same as CBLO is used by those who can take money or loan against the collateral securities and is also issued for less than 1 year period of time. So all of the above this answer are right. These are all the parts of money market instrument. Okay. Okay. Next question, clear. What is the meaning of gilt-edged market? Okay. Basically, gilt-edged securities होता है. Gilt-edged securities are otherwise called government securities. Gilt-edged securities are otherwise called government securities. This question comes actually in your exam of civil service, Odisha civil service examination. Okay, so as you all know that the gilt-edged securities stands for government securities. The market where the gilt-edged securities are traded are called government securities market. Okay, government securities market. Next, STR. STR stands for special drawing rights. SDR stands for special drawing rights. Okay, people are considered the SDR as the currency of IMF, or it is a group of the currency, or it is a book, you know, a box of currency where 5 types of currencies are available. So this one country can take loan as its convenient or as its exchange values. Okay, the 5 currencies are dollar, euro, pound, yen, and Chinese renminbi. Chinese renminbi. Okay, so SDR is a part of IMF International Monetary Fund, which was established in the year 1945. Headquarters is Washington, DC, and member is 109. ADB is situated in Manila, Philippines. Okay, so let's go to the next question. Question number 14 is there. What S denotes in NSTL? In NSTL, NSTL stands for National Securities Depository Limited. National Securities Depository Limited. Okay. So depository is a place which convert your physical form of share into electronical form and electronical form of share into physical form. Whenever a company wants to registered itself in a stock exchange, then the depository will be there who can convert their stocks and share into electronic form. That's why it will be sell through internet all over the world. Okay, so in India there is two depositories are there. One is called NSDL, one is called CDSL. Okay, there are two depositories in India. One is National Securities Depository Limited, okay, NSDL, जो कि हम पढ़े हैं अभी, और एक है CDSL, okay, National Securities Depository Limited. So answer would be option B. Question number 15. What is the minimum capital requirement to open a small finance bank or small bank? All we know that it is 200 crore. Okay? 100 crore is required for payment bank. 500 crore is required for private sector bank or foreign banks. This much of minimum capital we need to fulfill our minimum capital requirement norms set by Reserve Bank of India. चलो फिर नेक्स्ट क्वेश्चन के लिए, a bank open in special economic zones in India comes under offshore banking. Comes under offshore banking because in India the special economic zone is declared for the export promotion. इस कारण for the promotion of export it is actually declare some particular areas special economic zone where a business can be opened with minimum capital. There will be very less, you know, strengthen of rules and regulations. You don't get tax benefits for some particular years. That's why many companies or corporates want to open their companies over there to get this benefits. Okay, if a company open there, its intention is to provide, you know, transfer of money or export the money from one country to another. So the special economic zone के अंदर अगर कुछ बैंक ओपन होता है, that comes under your offshore banking. Okay, so चलिए फिर नेक्स्ट क्वेश्चन के लिए. नेक्स्ट क्वेश्चन, क्वेश्चन नंबर 17. एक इम्पोर्टेंट क्वेश्चन है. व्हाट इज क्रेडिट रिस्क? ओके, व्हाट इज क्रेडिट रिस्क? In bank, varieties of risk are available. One is credit risk, one is market risk, one is operational risk, one is liquidity risk or liquid risk. Okay, one is reputation risk, etc. We have varieties of risks, but in the most important risk is credit risk. Okay, credit risk means if a bank provides some kinds of loans and advances and is unable to recover the same, then it is going to be non-performing asset or stress asset. Okay, that is called credit risk. Okay, default of the banker to the maintenance CRR, default of the banker to issue credit card, default of the banker to release the credit to the borrower on time, default of the customer to repay the loan. The answer would be option D. The answer would be option D. That is, the answer is option D. That is default of the customer to repay the loans. Default of the customer to receive the loans. Okay. चलो फिर नेक्स्ट क्वेश्चन के लिए. The provisions relating to promissory notes have been incorporated in which of the following act? In banking sector, we need to know about three major acts. One is RBI Act 1934. One is Banking Regulation Act 1949. One is Negotiable Instrument Act 1881. Okay, 1881. These three acts is very much important to know about banks and banking operations. So the promissory note. Okay, promissory note का मतलब क्या है? When one party is promised to pay certain amount of money to the another party in a future date. Okay, if some debtor और जैसे हम क्या बोलते हैं, like buyer buy something on credit and is promised to pay a certain amount of money in future to the creditor or seller, and the seller is unwilling or reluctant to give on credit because he or she is not getting any types of, you know, guarantee. That's why the buyer or the debtor draw an instrument, an unconditional undertaking where it right to pay some amount of money in the future date. Okay, in the future date or future specified date, that is called promissory note. So in promissory note comes under your Negotiable Instrument Act 1881. Not only promissory note, bills of exchange, check, demand draft are also comes under the Negotiable Instrument Act. Okay, comes under the Negotiable Instrument Act. चलो फिर नेक्स्ट क्वेश्चन के लिए. Okay. In the capital market, the term arbitrage is used with reference to which of the following? Purchase of the securities to cover sales, sale of the security to reduce the loss, simultaneous purchase and sale of the security to make the profit of the price variant. बोलिए सर, बहुत easy answer है और बहुत famous है ये. The answer is C. Okay, the answer is C. The same product is sold in Bombay Stock Exchange and National Stock Exchange. When the price varies, okay, these two particular stocks, if the price varies, a person who can buy from this market can sell this market. Okay, the price variation can be the profit or the margin of the particular seller or investor, that is called, you know, securities. Okay, take an example. From a wholesale market, we purchase the things which is rupees 100 per kg. Okay, and we sell the same in our local market in rupees 200 rupees per kg, and in between that we can take a margin of rupees 100. That's called arbitrage. Buying one thing from one market and selling the same in another market and make the profit in between that. That is called arbitrage. Okay, so to the next question. It might be the last question of this session. What is stagflation refers to? Many times this question constitute stagflation. Okay, if you go to select or go to understand that stagflation is high inflation plus recession. Okay, what is recession? Recession is a market condition when there is stagnant economic growth or GDP growth for consecutive 2 quarters. Okay, for consecutive 2 quarters. If there is no GDP is growing, no production is happening in last 2 quarters, then definitely unemployment will be great. Okay, So you can say stagflation is a situation when there is high inflation and recession plus high unemployment. Okay, so the answer would be high inflation in the period of high unemployment is called stagflation. Okay, so I just hope that this 20 question we got understand fully. Okay, on that basis you can search its peripheral area also. So we're just abounding this session, and I hope that whatever we just discussed you got to understand, and in coming class we got to understand the more on this subject. Okay, so thank you so much for attending this session. We'll see in coming class. Thank you so much.